What's good, traders? Welcome to the boot camp, to another day in the boot camp. And today we are going to be talking about liquidity. We've done a part one to liquidity, but I want to really deep dive into liquidity and understand and show you guys why liquidity is so important and why you should be using it in your market analysis and understanding chart patterns. Because, when you look at the market, I can show you all the strategies in the world, but the reality is you need to understand why the market is moving, why the market is going up, why the market is going down, why the market is, moving in a certain direction. Okay. And so by the end of this video, my aim is to kind of change your perspective of things and show you guys how bankers think and how bankers are, and how the big institution traders are and how they think. Because for us, we're never going to be at that level where we're trading like big institution traders, right? We can have millions and millions of dollars in our trading account. And reality is, guys, we're never going to reach to that level where we can manipulate the markets, okay? But what we can do is we can think like them. And so when I was, going through my journey as a trader, I started to notice a lot of things when it comes to the market. And at first, I didn't know what it was, but then later on, I started to realize that what the market is, like I said in the first part of liquidity, what the market does is all based on liquidity. It's all based on this watery market, right? And so the way I look at the market is like a wave, right? It's like water, right? And so when water finds holes, is going to disperse. And so liquidity is something very similar to that. And throughout this video, I'm going to show you liquidity. I'm going to I'll make you understand liquidity. But what you guys need to know is, like I said in the last video, liquidity is basically price moving. But in depth, now that we're diving in deeper, this is where most buyers, most sellers are placing their trade. Okay. This is where majority are placing trades. This is where everyone is getting their order in. Okay. And so you need to understand that, because when you're trading, sometimes you might feel like I can't find entries. And that's because you haven't identified liquidity points or liquidity sweeps or zones in the market where liquidity is affecting the markets. And as a trader, you need to understand this, because if you don't train your eyes to see these points or these key levels or anything like that, you're going to realize very, very fast that the market is, moving at a very fast pace. You're going to realize that you won't find entries, and you're going to realize that every time you do enter, you're going to get stopped out. Why? Because the market doesn't want to be your friend. The market doesn't want you to make money, because when you make money, someone has to lose. And it's a hard pill to swallow, because if you're losing, you're on the losing end of the market. And trust me, guys, like I've been in this losing state for a very long time, and it's a horrible feeling. I totally understand that. But what we do need to know is that everything's just all experience. And when we build up enough experience, we will become the winner side of the trades, right? So liquidities, there's two sides to the coin, right? That's where people are buying trades, and that's where people are taking away their trades or selling or shorting their trades, right? Or closing their trades. So for example, if I let me just draw this out quickly. If I was drawing an uptrend, right? Now, if I asked you guys, okay, where would you take out your trade? You would say, I most likely, take my trades out over here, right? But what you need to understand is there's a lot of traders out there that also have order limits put in place, right? They have order buys, order sells, whatever it is. They've got it at the area where you are closing your trades. Why? Because when you close your trades, the market needs to find traders that are trying to buy or trying to sell if it's going on a downtrend, right? Because the market wouldn't be able to operate, or you wouldn't be able to close your trade if there wasn't anyone, losing, or anyone that was, doing the opposite of what you're doing, right? So if you bought here and you sold here, someone had to buy that share that you had in the market. Someone has to buy that, right? And so that's why the market goes in an up and down trend. And so when you are selling here, someone has bought here. Okay, someone has actually bought within this price, within this zone, right? And so when the market is going down, right? So when you sold here, the market goes down, and the market has now created a low, right? What happens is price now wants to tap into all the buyers. The price needs to now collect all the buyers again. And so that's why market slowly makes its way up, right? And so within this zone, we have people that sold in this zone are now getting stopped out because obviously the sellers are trying to hold their sell as long as possible. So when price slowly comes up, all that's happening is sellers are losing their trades, and it's like a build-up of sellers losing. When sellers lose their trade, what happens? They actually they have to now buy another share in the market. So when it gets to this point over here, what happens? Well, there's two things, right? Price comes down to stop these buyers, right? And then price continues to go up. And so the way I look at liquidity, it's a way of stopping you out of your trade, okay? And there's two sides of liquidity. It's either you're the best friends with liquidity, right? You're on the good side of liquidity, or liquidity is your enemy and you're going to lose constantly if you don't go on the right side of liquidity. And so when you're thinking like a bank, you're going to start to realize that these zones or these areas are just resting. I think they're called resting orders, or resting trades, right? And this is where people are having their pending orders. They're waiting for market to do this, right? Because they want to make money in the markets. And so when you understand that, you're going to realize that the market isn't actually like this, right? The market isn't like this. What really happens in the market is price goes up, creates a low, goes up, stops out these sellers, stops them out, goes down, stops these buyers, and then continues to go up, stops these, goes down, stops these sellers, or continues to go up, and then does the exact same thing like this, right? And that's how a trend is formed, right? Is where sellers get stopped, buyers also need to get stopped out, right? And the way I look at liquidity is they're like magnets, guys. They're like magnets to price, and they're very similar to key levels. And you're going to notice this. I'm going to draw out some key levels, or I'm going to draw out some liquidity zones, or highs and lows, and then we're going to find out which ones liquidity sweeps and which ones close to our key levels. And we're going to go through that so I can actually show you guys, so that then you guys can actually visually see. Okay, so just quickly, guys, liquidity is where everyone is buying and selling, or doing pending orders, or that's the area where a lot of people are getting ready to place a trade. So you're going to see price do a lot of wicks, and they're going to be very, very choppy. And I'm going to show you. Okay, so for example, over here, right, we've created this huge downwards push, right? Just huge downwards push to the downside, right? And so let's have a look. Price came down, right? And you can see that price created a high right here. Yeah, price came down, created a little high, and then continued to go down. So this is like the leg, right? And so you can see that when you can see price came right back to this area, right? And price came right back to this area, and look what it did, guys. It stopped out all of these sellers that were in this trade. All these sellers that were in this trade, it stopped them out. Why? Because it just swept them out of the trade. It said, nope, we don't want you. We're gonna go down, but we don't want you, right? And so then what happens? Price comes down. Okay, so then this area, this is now the new liquidity point. This is now the liquidity sweep. This area right here. Okay, and so price has now continued to go down. So where would you expect price to go? Well, you would expect price to go to the low of the liquidity, the low of this leg. So as you can see, most likely you're going to see price tap to this low of the liquidity. Okay, and the reason why I'm so confident that is because, like I said to you guys earlier, liquidity is like a magnet. Liquidity is going to be going to all of these lows, right? 1, 2, 3. Price goes up, down. There's so much liquidity here, but 4, right? Look at this, guys. And obviously 5, right? When price comes out of liquidity, breaks out of liquidity, right? Look at the magnets, where it's going to. It's drawn to these levels. Then once it breaks this, it's drawn to the next level. Once it breaks this level, it's drawn to the next level, right? It's not just going to randomly stop here. Price isn't just going to randomly stop paying and continue to go up. It's going to sweep, stop out all these buyers, right? Stop out all these buyers, and then we might get some sort of reaction to maybe the upside, or maybe we'll just continue to go on this downtrend. Okay. And so you can actually see even the way price reacts to here, right? You can see the way the price reacts to these liquidity lows, right? You can see that price, we had price go up, right? Create a high, price then comes down, keeps going down. Okay, cool. Look what happens, right? We had price create some sort of retap to these sellers right here, right? This is also, like, you could say, liquidity area. Obviously, if you scaled in, you would actually see, and we could actually, I'll show you guys, if you scaled in to this move, you'll actually see that price did, in fact, pull out of liquidity right here. Look at this, right? This is the high. Oh, this is the high. Price comes down. This is a premature sell. Price then comes back up, right? First of all, we just came out of this liquidity right here, right? Price just stopped out of this liquidity, right? Price was like, you know what? All the buyers are going to try buy here. Well, guess what? We're going to stop you out too, right? Price then stops out these buyers. This is the liquidity. This is the low, right? Then price comes all the way back up like a magnet to these highs. Look what happens. Stops out these highs, right? And then it continues to go all the way down to this liquidity low, and eventually it breaks it. Okay. So that's how you will find out liquidities. And then you can see that, okay, cool, this is a liquidity high. So when price decides to make its way back up, just know that price will need to tap on this liquidity high, right? If it decides to come back up. And so it's very, very important, very, very, very important to understand this, because you will start to realize that when you see liquidity lows or liquidity highs or whatever it is, right, you'll start to realize that price creates like a double top or double bottom or whatever it may be. It creates that kind of formation, right? So for example, even over here, you can see that price created a high, came down, premature sells, went right back up, spiked up to the upside, right? Then would scale in, look for a pattern, look for a chart, candlestick pattern, enter for a sell. And where would we sell to? We would sell to wherever liquidity lows are, right? So our liquidity lows would be down here, right? And you can clearly see that price comes to these liquidity lows. It might not have, for example, here didn't reach, but look what happens. It reached eventually, right? And so that's how you find out, and I'll show you some more examples, but it's very easy to see these guys. Like, once you train your eyes, you'll realize that it's very, very easy to spot these. Very, very easy to spot these. And by the way, guys, this literally works on every time frame. This is not something that only works on a specific time frame. It works on every single time frame. Okay, let me show you some more. So price over here, price created a high. Price created a high right here, right? Price created a high, price created a low. Okay. When price created the low, you can see price bounced up, and then what it do is stopped out all of these new sellers. All of these new sellers, oh sorry, the early sellers, they get stopped out. What happens? Price then comes down, right? It doesn't actually reach this point just yet, because look what happens, right? This is the new liquidity. And so price then retests the zone. And you're probably thinking, oh, it didn't actually tap into here. Well, sorry. If you really scale in, you will see that it created a high. Created a high here. And then what happened? Created a high here, then it swept, and then went right down. Where did it go down to? All the way down to here. Okay? And same thing here, guys. Like, look, price created down, high. Cool. We're going to keep our high right here. Cool. Price was choppy. It wasn't that nice. Try to even retest it. Look what happens. Stops out once, stops out twice. Liquidity sweep. What happens when we see a liquidity sweep? Price ends up going in the direction which is favorable, and then it's magnetized to here. Okay. And so then when price creates a low, right? And this is like a real example. This is literally like right now, right here, within the past few days, right? Not even few days, few minutes. We're in the 50-minute time frame, right? Price, early buyers. What happens next? Price comes down, stops out these early buyers, and continues to make its way to the upside. Where would we expect price to go? Well, we would expect price to be at the liquidity highs, right? Or the high of the market, which would be here, right? But obviously, this is like a counter trend, so I wouldn't actually trade this. But most likely, if price is reacting like this, we're going to see price go up to this point. We're going to see it. Why? Because we have sellers here. We have a bunch of sellers here that need to get stopped out. And price is going to do that. And you can actually see that price has actually done it even with this move itself. So price, just to quickly show you, price came down, created a high, came down, created a new high. What happened? Well, very, very clearly, price created, a high. People sold, premature sellers. Price came up, swept everyone out. And then what happened? Price ended up going down to these lows, guys, literally to these lows. Like, I can't stress this enough, right? How important it is to understand this, right? Because when you're going on a downtrend, especially, you're gonna see highs always get swept, especially when you're going on a trend, right? Let's go on another pair. Let's go on the 1 hour time frame. I'll really show you this stuff, right? Even like here, look at this. We had seller's reaction, right? What happens? Price comes, sweeps, and then it's gone right back down. Sweeps and then goes right back down, guys. Literally right back down, right? Well, here we can kind of see we're going on this uptrend, but when we're going down, where are we expecting price to go? Well, super easy, guys. We have lows here, all this built up liquidity, all these liquidity that could be swept. Already price has swept these lows, right? So now price has swept these lows, these early buyers, because we're on a buying trend, most likely price will now go to, where would it go? To these highs. Literally as simple as that, right? Now you're probably wondering, oh, what about these lows right here? Well, eventually price will cover it up as well. Price will eventually cover up these lows as well. And then it's going to also do a reaction like this. So obviously it's not going to be as crazy as that, right? You're not going to see anything crazy like that. But you need to start practicing this. You need to start understanding this. Because what happen is, you guys will see, a lot of traders will have, their orders right here. A lot of traders are going to buy right here, right? Stop loss just below this low, whatever. Price goes up, move stop loss to break even. You guys are going to get stopped out, right? And so you need to understand targets, right? So now I already know, okay, 1.27495, basically 1.27500, right? Key level. Cool. Price is going to tap there. Price is literally going to go to that high, right? I know that 100%. Why? Because there's a liquidity right here. There's sellers right here that, the buyers need to take control of. Sorry, guys. And so you're going to see this quite a lot in the market. And this is what's going to determine whether you're on the winning side or the losing side, whether you're going to have a good entry or bad entry. And you need to start thinking more like the banks. You can't just trade based like on looking at certain patterns or certain chart movements. You need to integrate everything, right? So don't just go based on liquidity. Don't just trade based on liquidity. Trade as a whole, integrate these things, right? So like, for example, for me, I have like different things that I integrate together to make one big strategy. And so that's why my strategy works on any currency pair, gold, it can work on crypto, because I use the fundamentals of the market and I brought it all together. I integrated it all together to basically to, be profitable in the markets. And just by looking at the markets as well, you can clearly see right here as well. Like we had, if I just quickly, we had early buyers come in right at this low, right? Early buyers, right? Early buyers. What happens? We get swept. Buyers get swept. What are we expecting from this market right now, guys? We are going to expect the market to go up. Might not go all the way up, but if it does, amazing, right? And so that's when we can scale in, have a look. Okay, cool. We have left shoulder, kind of like a left shoulder here. Left shoulder, head, probably creates the right shoulder, right? Wherever it is. And then price is just gonna, go to the top like that. Simple. Why? Because price is a magnet. It's gonna go up to that level again. It's gonna go and test out the sellers at that level. And so that's why it's so important to integrate all these different things. And guys, like we're on like, I don't know, day 25 of the boot camp, and you're gonna realize that this stuff is so fun. Like once you understand, obviously the money side is amazing and it's so fun, but like once you tap into the markets, like the markets, I feel like is its own little zone. Once you tap into it, like you guys are really gonna love the way the markets are, because the way it moves, the way it is, the way, the way it thinks, the way you can see human psychology when it comes to the markets is crazy, guys. Like you can see when people are greedy because the market moves hella choppy. You can see when people are indecisive because the markets are very, very choppy. And so when it's stopping everyone out, that's where you look for that really good entry. You be patient, right? So the market is going to test your patience. The market is going to show you that obvious buy or show you that obvious sell, but it's up to you to decide whether it's, going to that level or not, right? Or if it's going to rebound off that level. So don't just use key levels or support and resistance as like your favorable levels, because, like I said, you can draw so many like support levels, and you can see that support gets, swept sometimes, even like here, I don't even have to draw it out, right? Support does get swept. But the thing about this is, because that liquidity, we had this rejection. This is like such a good entry model, because it's like, cool, we see early buyers here, right? Cool. What I'm going to do is I'm going to wait for liquidity to stop out all these early buyers. Cool, it did that. Stopped over here. Okay, cool, we'll enter, right? And so even though this isn't like the craziest liquidity sweep, we clearly tapped into these highs from this liquidity sweep, right? We tapped, we said, this is the early buyers, comes down, sweeps. Where does it head to? The highs of that swap, right? And so it does the same thing, right? Even over here. Create the low, swept it. Where are we heading to? Well, most likely, it's definitely going to tap these highs, right? Especially when markets are moving choppy like this, you can keep these really small trades and keep it going. Obviously, more than 15 minutes. I would usually trade, look at the 4 hour, look at the 1 hour or 2 hours. Liquidity sweeps are everywhere, guys. You're going to see it every single time frame, like everywhere. Like I can literally go back and show you guys, like right around over here. Look at this, right? Price comes down. We obviously create a high. Price comes right back to that high, creates a double top, right? Sweeps everyone out, right? What do you do? This is the liquidity right here. Cool. We're going to sell, right? What are we selling? Obviously, we're going to sell, wait for the break, wait for the retest, entering probably around here, selling. Where are we selling to? Well, we can sell to the low, right? What happens? Price goes there and smashes its low. And you can actually see that this is at a key level, guys. Like 1.26. It's at a bloody key level, guys. Like, I love the markets when it does this. Like, I don't even force it to do this, guys. Like, it's just everything lines up like a jigsaw puzzle, and it's up to you whether you want to understand it or not. And the way it's going to be when it comes to you understanding it is you practicing, guys. And so what I want you guys to do is, I don't want you to, find key levels. We already did that, right? We already found key levels. But what I want you guys to do is mark up like liquidity highs, liquidity lows, where it gets swept. Liquidity highs, liquidity lows, where it gets swept. I want you to, actually mark those down, because every time a liquidity sweeps, look what happened. It gets magnetized right back to that price, right? It literally comes right back. Like, I cannot even stress this. Like, it literally came right back, guys. Like, it's just that type of movement, right? So when price is creating a low, like here, it created a low, right? And you can see that price, obviously, this is what GPUSD. You can see price then, comes down, it's creating structure, creating structure. Okay, cool. And then we had this impulsive move to the upside. Okay, cool. We saw the impulsive move to the upside. We're going to expect price to come back down, magnetize, do a liquidity sweep, which it did. Cool. Now this is where we're going to find an entry, right? Within this area right here. Then once you found your entry, you then hold it. Where are we holding to? Well, you can see, let's say we do a long position here, stop loss just below the liquidity sweep, and then all the way targeting where? These bloody highs. Why? Because price is going to go back. Price is a magnet. And if you guys are scared, you can have TP1 here at this high. TP2 where? At this high. TP3 where? At that high. Why? Because that's how the market moves. That's where it's going to go. It's going to go. You can see when price went to TP1, you can tell we had scared ass traders. Why? Because price instantly started to come down, right? But then what happened? Price said, nope, we got a bigger liquidity right here. This is the liquidity sweep. Why this is a liquidity area? Because, or why is, this is strong magnetic area? Why? Because we had a sweep of liquidity. Price came to these highs, swept. This is more important now. This high right here. It's way more important than all these little slimy little ones, right? And so that's why it's so important, guys, right? So homework for today is find liquidity, lines or areas, win or sweeps within 3 or 4, time frames, and play around with different currency pairs and play around, find it, look for it, train your eyes, keep going. Like literally what I just did for the past like 10 minutes. Just train. You want to train your eyes, right? You want to train it you want to strengthen it to the point where you don't actually have to look anywhere. You just know where liquidity is, right? You just know, okay, I know that this, I don't know why it does that all the time. This is a liquidity sweep. Boom. Where does it target? Targets this flipping low right here. Simple, right? And so it's literally just magnets to magnets, magnet to magnet, literally highs to lows to highs, high to lows to highs. Literally simple as that, guys. So practice. If you guys don't understand liquidity, rewatch this video like a million times. Keep watching it until you get it, because you are going to get it, and it will take some time. It took me a minute to adjust to it as well. And I actually I didn't even know it was called liquidity. For me, I literally just used to say, this is the market stopping me out. Like this, in my head, I used to always say like, okay, I'm going to place a buy, but is this early or not? Okay, let me have a look. Have we had early sellers or buyers? So for example, let's say we're here, right? Price is in this area, right? The way I would think is, like, let's say price has just come down. I think, okay, cool. I want to sell here, but like, is the market going to come back to this area to test all these sellers out, right? Or to stop all these sellers out? Most likely. So what I'll do is I'll wait. And then what happens? We get swept, right? We get swept, right? This is now a new liquidity area or liquidity line. Then that's liquidity. Price goes right to where the target is, which is these lows, right? Price goes right to that target. Then what happens? It's like a magnet, guys, right? Price then goes right back up. Why? Because this is liquidity. This is a strong liquidity. And so price goes right back up, stops them out, comes right back down to these lows, stops these out, and then goes right back up. Like oh guys, it's just too easy. It's too easy. The market makes it too easy sometimes, right? And so you need to just be on the right side of the market. Practice. It's not going to be easy like the way I'm explaining. I understand that, guys, but it is going to take some time. It's going to take a while for you to become, trained, and for you to it's taken me 5 years to get to this point where I can just pinpoint, but for you, it might take, take a few time, but just keep practicing. Don't just give up because you can't find liquidity zones or you can't see what I'm seeing. just keep practicing. Rewatch this video like a million times until you get it. Like literally rewatch this video a million times until you get it, right? So just key points that I just want to write down for you guys before we leave. So liquidity, right? And you can actually write this down as well. Liquidity, and we're just going to write down a few points. This is areas, I don't even know if that's how you spell it, but let's just in the market where people get stopped out or enter. Okay, so remember I told you most sellers are going to get stopped out, most buyers are going to enter, right? Number 2, think like the banks. Okay, number 3, or third point, right? These are just resting orders. Okay, liquidity is basically just resting orders where people are waiting for their area to get tapped in, for their sell to get tapped in. People are just waiting for that, right? So once they get tapped in, that's where the majority of the move is going to happen. Okay, next point will be yeah, so like I said, where orders are filled. Okay, next point, markets will give you obvious buys or sells, obvious orders, let's just call it, with the trend to stop you out. Okay, what I mean by that is the market will give you an obvious buy, a premature buy or premature sell for you to be like, oh, I need to enter, because if I don't enter, I'm going to miss out on this move. And then it's going to stop you out, and then it's going to continue in your direction. Okay, and then last point is, which I've been screaming out for a while, liquidity is like a magnet for price. Okay, so write this down, guys. Like literally write it down. Okay, it's not gonna. There it is. There we go. It's not going to not gonna make liquidity bold, but it is what it is. Write this down, right? Take a screenshot, pause the video, write this down. These are all the points that I'm going to give you to liquidity. We had a part 1. This is part 2. And I don't know if I'm going to make a part 3 or part 4 because it is quite important, but I'm just going to keep repeating myself until it gets to you guys. So to make things easier, just keep repeating the video, keep watching it again and again, keep taking notes, keep hearing me out, slow things down, really, take it minute by minute or whatever it is. And yeah, that's pretty much it, guys. Homework: find liquidity points, in every time frame. Use all the time frames that you want, daily, weekly, 4 hour, 2 hours, 1 hour, 15, 5, 1, 2, whatever it is. Do that. And yeah, that's pretty much it. And I'll see you guys tomorrow.